Ladies and gentlemen, K Kim here. Welcome to the market update, the weekend edition. Hope you guys are enjoying your weekend. Today's Saturday, midday, and let's start with our weekend analysis here. So we'll do a little bit more extensive analysis today. We'll start with Spider, and I'm gonna cover more extensively on these indices. Gold and silver has been getting a lot of attention as of late. We'll talk about that. As usual, we'll talk about Bitcoin. Obviously, Bitcoin's trying to break out here, so we'll talk about that. I think, looking at the overall market, the equity market here, as you can see, we come long way, right? From the March lows to where we're at right now is about 53% move since the March lows. On the NASDAQ, that moves is much higher, 65%. And you can see on the S&P, it's up about 4% year to date, while the NASDAQ is up 30% year to date. That's crazy, despite the fact that, that we had that fast, abrupt massacre we had in late March. So, obviously NASDAQ recovered very quickly and kept going higher. But you can see that, transport is still negative 6% year to date. While the small caps is also, they're all catching up though, because at one point these guys, transport, Russell, they were extremely lagging, and you can see that they're kind of getting there. They're catching up. So we're gonna talk all about that and trying to figure out where we can go from here. I think again, this is something we've been talking about last several weeks, pretty much all throughout July, on the videos that I've been publishing almost every single day, and the weekend videos that. Market is, we're getting into that level where NASDAQ is pre-extended. S&P is now getting back to the all-time high level here. So how we should prepare ourselves dealing with this market going forward. It is all coming up right now. All right, so let's actually follow up on the 65-minute chart, and I'll come back to the daily and we'll look at the overall picture. So go to hourly chart or 65-minute chart here, and let's look at the price section here real quick. And so as we've been talking about here, and it's again, I feel like a broken record here, but as long as we continue to see the price above my midterm moving average, our posture should be bullish in the midterm, right? And as the market continues to cultivate and establish its higher highs and higher lows, and that's what you call an uptrend, right? And when the uptrend starts to get established, and which it was established once it cleared this pivot, that was important pivot back in mid-June, and cultivate it again. You can go back, check my video back in July, early July, see what I was saying. I'm not just saying that now they were at 33.4, but when we were back in 310, 311, even around 300, and just see, how I was dealing with this market. If you've been just coming in today and watching my video for the first time, because, my followers and my clients know that, in June, throughout June, we saw some volatility, but long-term picture was still bullish with the short-term volatility that was going on. But once we clear above these pivots and then broke above my midterm moving average and then start cultivating higher lows and higher highs, the stance changed. Where now we're seeing the establishment of an uptrend in the midterm, right? And ever since then, we did see these kind of abrupt sell-off where, every single time it seems like, there's some kind of sell-off, there's some kind of a shakedown, some shenanigans. A lot of people tends to freak out and they get into a dramatic conclusion. When I say dramatic conclusion, I mean like, oh my God, this is it. We're going to go down. We're going to go 280, 270, 260, March lows, 1929 Great Depression. Every time when we see a pullback, all of a sudden we got all these guys throwing up their 1929 overlaying charts, or 2000 dot-com bubble overlaying charts, some kind of data. It's flooded on social media, right? And so what you want to do is you want to look at this objectively, right? Because I mean, this is I have to say these are kind of a normal occurrence where the market has its volatilities, right? And again, we've been navigating this market together throughout the days and weeks and months since the March low, since when I began doing my daily videos. And so anyway, we're up here now at 334, and my midterm moving average start to really angle up here as once we cultivated that higher high for the first time, right? After that up and down shenanigans, kind of a consolidation type of move, a lot of volatility in June for sure. But once we've, cultivated higher high, higher low, ever since then, the price never breached below my midterm moving average. And we wanted to continue to give benefit of the doubt to the buyers. And then we're up here. And what happened was, and once the market started switching gears, now it's getting into, switching gear to third and fourth, fifth gear, you see that now pullbacks get shallower, and shallow. We don't see these bigger pullbacks. And then when the market switches gear, it usually just respects my short-term moving average for a while, right? This is where market switches gear. You can see that my short-term moving average was there. We'll pull back some shenanigan. Again, my short-term moving average for a while. Again, my short-term moving average. It's no coincidence. On Friday, we came down, tagged that my short-term moving average, and then threw a step back above it after throwing that hammer bullish reversal candle there. Same thing here, that hammer bullish candle near that gap support and my short-term moving average, thrust, gap up, continuation, right? And so right now, everybody's saying, well, is this market extended? And what we've been talking about is we saw this rare signal happening for pretty much the entire week, this week, and on the 65-minute chart to see my oscillator to move sideways like this in a tight range is extremely rare. So again, my 65-minute oscillator was designed to oscillate back and forth, maybe some divergences and things like that, but never just moving sideways like that for a long period of time. And I explained it on the video. You can go check it out. But I think on Wednesday or something like that. But when this happens, market is very adamant about giving anything for the sellers, right? The sellers is non-existent, but buyers are not unloading their positions either. The longs, right? They're not unloading their positions either, and they are newcomers. I don't know, maybe the bears are flipping to bullish, maybe cash people going long. Whatever the reason might be, what we're seeing is slow, methodical accumulation. And I think a lot of it is retail traders, right? A lot of retail traders are continuing to buying this market up. We continue to grind higher. And I can't tell you where the top is. I can't tell you where the top is. And I said this to you guys before that, trying to call top is the biggest, hardest endeavor in trading. And how many times people thought that the top was at, back in April, the top was back in May, and then it's June, and then it's July, and then it's August, right? It was 360, and then 370, 380, 390, 300. They said they couldn't get above 300. People said this market, there's no way that this market can get into a V-shaped reversal all the way back to that's what people said, right? But we're here, a new all-time high. I mean, not new all-time high yet. We're just very close to the all-time high. This is why you want to ignore all the noise, all the chatters, and there's so much noise nowadays. With the internet, there's so much noise. And because of that, real good information gets choked out. Just go out on YouTube, man, and think last several months, since March lows, last 3-4 months, which videos gets the highest views? Crash videos. Crash videos gets the highest views. Go on Twitter and stock tweets. Which tweets gets the highest likes and highest retweets. Crash, bearish, top, right? Tweets. Not just today, not just this week. I'm talking months ago. And yet, market continues to move higher. Why? Because this market is designed to fool the majority of people majority of the time. And therefore, the majority of people follows the fool. Foolish information. That's why there's good information out there. Because the internet, everything is there. It's just that good information gets choked out and it's very hard to find that good information, and you get kind of deceived thinking, because people think that, well, it has high views, high reviews, high comments, high retweets, high likes, he gets high followers, he must be credible. It's actually opposite. When it comes to financial tweets, when it comes to stock market, it is. Everything else, yes. You're talking about comedy or product. Yes, if most people, or movies, most people like it, that movie, that product probably is a good movie, good product. When it comes to financial market, when it comes to making money, when it comes to stock market, it's actually the opposite. I want you to understand, even when you go on YouTube, there's plenty of people out there with millions and millions of followers on YouTube, subscribers, telling you how they can help you make money in real estate and all that other crap stuff. It's all not true. I will not buy into that. But anyway, so I think right now we're getting here, and we haven't crossed yet, but we're kind of in that vicinity where this potential level could act as support, meaning this could still bounce from here. That means market is kind of like, it's extended, but market is trying to create space so we can go for another shot. Just think about Michael Jordan, like crowded with defense, right? Just the way he does his fadeaway, just create a little bit of distance from himself with the defense people and shooting that fadeaway shot, right? It's crowded. We've been in overbought level. Bulls been tired, but it's been keep pushing and pushing and pushing. Nasdaq is up 65% since the March lows. We have not seen anything more than 5-7% correction. I mean, you know what I mean? So it's pretty crowded. Bears are very anxious right now. Even maybe longs are anxious. Like, this can't go on forever like this. And what this oscillator is telling us is that it's trying to create just a little bit of space to possibly push even higher. That's kind of what I see here. So going into next week, we'll have to continue to track this oscillator, right? If this thing falls over, there will be another support here. That's kind of, when oscillator is elevated, it's going to try to find support as much as it can in every single area. So it'll be important for us to continue to navigate this. And obviously, if you follow me at 2K Kim on Twitter and StockTwits, I will update you guys on this matter. Let's go to daily chart here real quick. So the big gap right here, it's been filled. It's been completely filled. And that was the only last gap, down gap remaining. You know how many gaps there were in late March? A lot. There's 1, there's 2, there's 3, there's 4, 5, 6, 7, 8. 8 down gaps all throughout March. Those are big down gaps. Remember, like, it was a lock limit down. It seemed like it was a lock limit down every morning. Right? There were 8 big gap downs. And those are big gap downs. You know, there are 8 big gap downs. And one last down gap was just filled this week. Bears have no more gaps. In that process, bulls have opened up this gap, this gap, this gap, this gap, and some of these a lot of tiny gaps here. Right? These gaps have not been filled. And you think, well, that means we're going to come down and bears going to fill these gaps. Not always true. all gaps, especially up gaps in a primary term uptrend, doesn't always get filled. We can always go back and check some of the gaps that were open in 2000. Look at this, 2016. There's a gap here. That gap never got filled. There was a gap here. This gap never got filled. There's a gap here. That gap never got filled. There was a gap here. This gap never got filled. And as this thing, the 2016 guys, as this thing was going higher, and this was when election was going on, obviously in November, right? And how many people thought that, you know, this thing, Trump taking the office, this thing is gonna come down, fill this gap, fill this gap. How many people are talking about that? Have you guys been on social media back in 2016? A lot of people thought that this is gonna come down. Lot of these prominent people on TV and CNBC called out and saying that we're gonna see a 25% correction, regardless who wins. And that would have been Spider coming into 150. That's 1,500 on the S&P 500 index. 150, and that would have filled all these gaps. That was open. Never did. Never. That gap still remains open today. So what makes you so sure that these gaps are gonna be filled? Well, you're gonna believe the same narrative that didn't even work out this entire rally? All of a sudden, the second wave is gonna come, is gonna bring everything down. Entire economy was shut down, and market just did this. So again, you wanna survive in this market, you wanna make money in this market, is to ignore all the narrative, quote unquote narrative, and all these noise out there. And you gotta come up with your own conclusion. And you gotta follow the price. I'm not saying completely dispute, completely ignore fundamentals and economicals, right? Follow those, understand that, but it has to be substantiated by the stock, by the price, right? That's why we cannot ignore uptrend. That's why I think the biggest problem with human beings trading is our emotion, containing our emotion. You see one thing, but you hear another. You see market doing this, you hear from TV and everybody else this. That's the discrepancies. Which one to believe? Do you gonna believe what you hear, or do you gonna believe what you see? You have to believe what you see. Let's bring this up a little bit right here. My short-term moving average on the daily chart is, you know, residing at 325. We got some of the gap edge. So we got these gaps being deployed, and that's a good thing that buyers opened up those. Those are tiny gaps looking at the daily chart, but those gaps going to provide support should the price decline. And so it looks like, and we've been talking about this, man. We've been talking about how this market operates, right? You guys remember? If you've been watching my weekend videos last several months, this is what we've been talking about. Market goes up, consolidates, goes up, consolidates, goes up. And when it consolidates, it usually takes its time and then prepare for the next run. And when the next run happens, it usually cultivates higher high. I'm not just saying that today because it did this. I've said this back in July, right? So we want to continue to give benefit of the doubt to the buyers. Also, in one of the weekend videos, I talked about how to navigate this market in this kind of condition. And I don't have time to talk about that today. You can go back, check my videos, you know, read through the titles. There's a video called How to Navigate This Market. Navigate this market as the some of these large tech stocks are increasingly overbought, but they can't stay overbought much longer than what most people think or can able to, you know, trying to predict where the top is. Let's go to Qs here. So obviously NASDAQ. I've been saying that I don't. I don't know. I've been saying this for months, and you know, as my short-term moving average still rising, that short-term moving average is still providing support. We slightly gotten below it. If you thought that was bearish, You got trapped here, and we made new high. People thought that that's a double top, right? Maybe that was a little trap there and just made another higher high. And this now double top is what? Nullified. Well, then people thought that this was double top too. That was nullified, right? People thought that this was top. This is 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 top. And some people say, well, yeah, but sooner or later we'll get the top. Correct. Sooner or later we will get the top. But by the time, if you are shorting this market continually, by the time the real correction actually occur, you're not going to be able to profit any of that because you've already got burned trying to short this, you know. So, and even though, you know, we may see a pullback, we got the short-term moving average at 263 now. 250 got mid-term moving average. And, you know, when I look at a daily chart though, because it kind of reset itself a little bit. This is a daily chart. And if I just draw this line here, we still seems like it created a little bit of, we still seem like we're not completely overbought. You know, my mid oscillator looks like we still got some room to go, just a little bit more. But remember, some of these areas, when it did hit overbought, right, all it did was it took its time for the oscillator kind of reset. Just come down, got back. So all these little pullbacks were just part of consolidation, not a huge correction. Is there a possibility that this thing can do this for the entire remainder of this year? Market had done that before once, 1994 and 1995, I believe. For an entire year, market kept going higher with no more than 5% correction. Actually, in 2017, we also did that. I believe in entire 2017, we did that. Maybe not in... Actually, no, 2017 with a little bit bigger correction here. I mean, this was, I think, bigger correction here. Not bad. So 5% was worse. So that's not a big correction. So 2017, that's 2017 right here. That's 2017 all the way here, right? The worst correction from January 2017 to end of 2017, the worst correction the entire year was 5%. That's it. All these were 2% or 3%, 3%. So entire year, NASDAQ went straight up with merely 5% correction. So you tell me, which makes more sense? Trying to short this just to grab 5% correction? No, obviously not, right? So we want to continue to give benefit of the doubt to the buyers. But you, at the same time, you got to understand not to chase some of these extended stocks. And I've also talked about this in one of the videos before, right? There are plenty of stocks you could have got in instead of chasing something like Square, or something like Lowe's, something like Spotify, something like Apple. You should have been already in those stocks down here. You had a multiple chances when, you know, if maybe you didn't get perfect bottom, right? Let's say you didn't get that. That's fine. You could have waited a little bit. You see that that's a bearish death cross. That's a bullish golden cross. So when the price started cultivating higher high, higher low there, I know. In April, sentiment, the fundamentals was bad. It was difficult. But market thrives on fear. And it thrives on fear and dies on euphoria. And market bottoms in panic. See what I'm saying? Market bottoms on panic, which will be some March lows. Market thrives on fear, and it dies on euphoria. We still kind of don't have euphoria. We have on certain sectors, certain stocks we do. But as a stock market as a whole, we do not have a euphoria when we have a transport and the Russell and the banks. Still negative. Year to date. You know, some of the stocks that I talked about before, some of the couple stocks that I talked about before, I believe, you know, one of them was why chase Square or something like that when you could find some of the value stocks to invest in, like something like FedEx, right? I mean, FedEx has been lagging, but recently it's been breaking out about 102% since March lows, right? There are some stocks that I talked about, maybe Alibaba, right? That was which I talked about before when this was somewhere here, right? And made a move. So what I'm saying is, you don't have to always chase these stocks. Something like Square. Do you really want to go long on here, up here? No. Best time to go long was here, which I did, and I closed out everything here. And then market even went a little, Square went a little more here. I don't mind, that's fine. I closed out all of my positions up here. But what I'm not going to do is I'm not going to start going long, unless obviously you're going to be start day trading, short-term trading, right? Let's go to transport. So this transport. So what you could have done instead of chasing the NASDAQ stocks, you could have focused on some of the weaker links, right? Something like transport, and could have got into transport when it was lagging here in June. That would have been a great level entry, maybe on this gap up as it's held somewhere in this vicinity, right? Could have done that instead of chasing high flyers. Look at the transport breaking out. What does this tell you? Tell you that we're in an uptrend. High, higher high, higher high. Low, higher low, higher low. Isn't that interesting? Isn't that interesting that it is faithfully, I mean, very faithfully cultivating higher highs and higher lows? It looks like this is getting up here to fill this gap. Let's go to Russell 2000. Same thing. Instead of chasing tech stocks, you could have gone long on some of the small caps. Maybe Russell 2000 also, right? You could have bought in these levels instead of chasing NASDAQ. In this gap up maybe, on this pullback. And then maybe you could have another chance go long here on this gap up right here, which I've done. I was actually accumulating calls on small caps here, 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 and here. And I close about 1/3 here just so I can unload a little bit, you know. But I also have quite a bit of small cap stocks I own since some of these levels, which I'm holding them quite a bit. So what I'm getting at is, instead of chasing, and I said this before, because when NASDAQ was hitting all-time highs, all these indices were lagging. Dow was lagging. Transport was lagging. The Russell 2000 lagging. Banks were lagging. Again, you can go back and check. Why focus on the sector that has been just you know, extended? Why not focus on some of the indices that has been lagging? Because as far as the performance is concerned, these laggers will have a much faster sprint when they do move. Here, let me give you a good example. Since this is May 15 and this is June, so this move right here, right? So look, May 15 and this is June, early June. That's how much move? That's a 31% move on Russell 2000, right? May 15, June 8. Okay, let's go to NASDAQ. May 15 here, June 8 right here, right? So May 15, June 8. That's May here. That's May 15. Here, I'm not doing a tricky stuff here. Is May 15, right? June 8. See? 14%. Same duration when the Russell 2000 did 31%. So didn't it make sense to, instead of chasing some of these tech stocks that are incredibly extended, what if you, because I think I don't know why people, I think what people were doing was they were going long on the some of these extended stocks, and then they're shorting quote unquote weak stocks. What you have to do is, you want to do the opposite. And you have to be patient with that, because you could say, well, while the Russell 2000 was just lagging, NASDAQ did continue to faithfully climb up. True. So I was already in those tech stocks, so you keep riding it instead of chasing. So, but I wasn't buying at the top on these tech stocks. Instead, I'm like, you know what? I'm going to buy Russell 2000. So I was buying, Russell 2000, not only Russell 2000 small cap stocks, but I was also buying some IWM calls in these levels. And those are, a little bit more shorter term position. I'm targeting somewhere here about 162, 167, right? And that's, that's from here to here. That's still a 24% move. And this is why you see the NASDAQ is negative 1.15%, and S&P is flat. But you got the transport is up, 2.37%. Russell 2000 is 1.59%. Let's add XLF. XLF is, 2.14%. XLF is been lagging quite a bit, but finally making a move here. But XLF is about 2.14%, right? And it looks like XLF potentially, possibly going up here. Filling these two gaps. We got those gaps here. But again, XLF did come down, but overall structure is what? You see how when did this thing come down, it didn't come all the way down, made a lower low. It stopped short, and we are still in this uptrend, higher lows. What does that mean? It means potentially there's a good chance this thing go up here and get what? Higher high. Let's go to gold and silver. So as of Thursday, I am all out of my gold longs. And those were, I've accumulated back in mid 2019 and been buying the dips, and I'm all out. I actually kind of got out a little bit last week, and then, somewhere here, and then I got all out of it Thursday. Got all out of it on Thursday. And mainly is because on my weekly chart, we're getting into overbought sentiment on my weekly oscillator. And you see that how we start now we're going pretty much vertical here. This is not a level to chase. Can it go higher? Sure. The odds are catching up though, right? This is what I mean. You should have gone long when there was, because again, market thrives on fear. It dies with panic, thrives on fear, and it dies with euphoria. We're kind of getting into the euphoria there. And euphoria could continue higher. But I'm very satisfied with my gains. So I'm all out of gold. Same reason with silver. I've done the same thing. I was accumulating when nobody was wanting them. And there was fear, right? I actually first started accumulating here. So I had to go through some drawdowns. And then I bought more here. So I was accumulating in this vicinity, right? I had shares and call options. And then I think I closed out once here. And then last Thursday, I'm all out of silver longs. And I'm very satisfied with it. And after you close your trade, if that stock or ETF or index continues to move higher without you, it shouldn't matter. You executed your trade, you executed your plan. That's a good trade. You've done your job, and you continue to watch it and see how it behaves, but it keeps going higher. That's fine. I'm totally fine with that. But I'm all out. Same reason. On the weekly, right? We're getting pre-extended, same level as back in like 2016 and stuff. Like here, as far as my oscillator tells me, we're getting into some of these levels where we saw some of these kind of I don't think it's gonna do that, but we may see something, something like that, right? We may or may not though. I'm not calling top, you see. I'm not shorting. I'm not gonna short here. I'm all out of longs, I'm good. But at the same time, I'm not gonna short. Because I just said on the indices, the hardest endeavor is shorting. But I'm gonna wait. If we do see a pullback, I wanna buy. But he may correct, because the thing about shorting, why it's so difficult in a super rising stock like that, you want to short when a stock or index in a downtrend. Are we in a downtrend? No, we're on a euphoria level right now, right? Remember what I said. Market dies in panic, thrives on fear, and ends with that, what is it? Market bottoms with panic, thrives on fear, and it tops with euphoria. And we're kind of getting into the euphoric like move here. That's what I mean. But the problem with the reason why it's so tough to short, especially when stock is moving like this, is that it could correct through time, or it could correct through price, or it could keep pushing higher. So for you to properly call that short is you got about 30% chance, and that's not good enough for me. And 30% chance if you're super good. If you're super good at calling top, like this is the intermediate term top, even then, you only got 30% chance of making it, because why? It could correct through time. It could continue to grind higher. Or, so that's 30% chance, this is 30% chance, or we could just crash down, that's a 30%. So even if you're super good at calling intermediate term top, you got 30% chance of making it. So I'm actually waiting. I actually like to see silver pull back so I can accumulate more. If not, gold and silver. I'm also all out of GDX on Thursday also. No, I think I was all out of GDX before. But if not, let others chase it. Let's look at Bitcoin. Let you guys go with this. So Bitcoin is finally, so I've told you guys last week that I'm long since this gap up here, 1150 or so. Let's move this here and move that there. No, I'm gonna do this. So here, and then look, so this is, this, because when it gapped up, that's when I went long. And then now we've cleared this level, and looks like we saw it's down about 10% on Friday. It's because people chasing it. They waited until it breaks out, and you know how the market is. Market loves to, punish those chasers. And then we saw abrupt sell, some shenanigan there all of a sudden out of nowhere, and fill that gap and that active support there. But we have subtle. That's a good sign right here. Even though we saw a little bit of shenanigan, came pull back, we got the higher high now. All we need is higher low. What we don't know is it's going to be higher low here. I'm going to come down lower to maybe 1151 and go higher. We don't know that. So we got the low, we got the higher low, we got the high, we got the higher high. We just need higher low. Where? That I don't know. We did just fill this support, a gap here that potentially gonna act as support. If not, we got this horizontal support, prior resistance, potential new support. My short-term moving average is residing in that vicinity at 12. If it continues to lower, we got 1151, which is a gap here that it gapped right here. If it's gonna continue lower, even below that, we got the gap fill also gonna act as support. So we got support here currently, we got support at 1224 and support at 1151, and worst case scenario, we're gonna support 1059. That's why I like gaps, because gap is going to provide pretty solid support zone. So I'm going to continue to hold that, and we'll come back next week and we'll talk about it. So, well, there you have it. Let's continue to be let's continue to give benefit of the doubt to the buyers. What I've been also doing though on Friday, I was unloading some positions. I'm still long. Multitude of my positions that I've been accumulating since, these lows. Also, a lot of my longs, I've been long since back in 2016. You know what I mean? So I held a lot of those. I didn't close out any of my positions when it went long here, when we saw that big decline, but I've been buying these levels. I didn't see this one coming. Just to be honest with you guys, I didn't see that one coming. and I didn't panic either. I didn't close out all my, I held everything, and I started accumulating more on these pullbacks, and they really helped to, I'm well above COVID, and my trading account is well above pre-COVID area, even though S&P is not all-time high yet, and while the transport, Russell, the small caps, and the banks still negative year to date, and I was able to accumulate a lot of those stocks also, a lot of the small cap stocks, some transport stocks, bank stocks also. And so, and some of the stocks that were doing well, right? As you guys know, I closed out my Lowe's, I closed out my Square, I did close out all my Apple longs. I'm holding full my Google, but again, I've been long on Google like for several years now. And so what you do is, if you've been long and there's some stocks that have pretty nice gains, maybe 70%, 80%, 90%, 100%, take some off. But you don't have to close everything. Maybe take some off, half, 1/3 or 2/3, and then see where it goes. And then if we do see a correction, you deal with it, and then maybe see which level to buy again. And then you continue, continue to ride this trend. As long as we're in an inter-primary term uptrend, intermediate to primary term uptrend, which we've been in since the March lows there, right? Anyway, so you guys enjoy the rest of this weekend, right? I'll come back for you guys Monday, and we'll go from there. Good luck trading next week.